Okay, hello students. This is a lesson on our financial unit 8.1, really 8.2. We're talking about income tax. And so you probably don't need my picture, so I'll stop my picture. Okay, so here's some things about income tax. Of course, we have our calculator. Please make sure that you are very familiar with your calculator. Um, and we'll use this extensively in this unit. So we're talking about income tax, which is a major way that our government receives revenue. And income tax is something that really it's supposed to be voluntary. Be honest about it. And I have worked for the IRS in the past, and and have paid taxes for several years, and have gone through this process of doing the income tax. And I have learned a lot just teaching this one lesson from this book, and I hope that you'll get something from it too. All right, so the question is, I'm making money, okay? And I want to know how to figure my income tax out. I could pay somebody to do it. I could take a quick form and try to fill it out myself, or I could read the book and go through it step by step. And having spent several years doing that last option, I can tell you understanding how income tax works is very helpful. So what we're going to do is the best way to do this is just explain how it works and do a problem. Let me go to my next page. I forget how to find the next page. Here we go. This is what you need to know. There are 3 steps. Here's the first step. Got to determine your adjusted gross income. I call that AGI. Okay, so your adjusted gross income is a key number in figuring out your taxes, and it's found out by taking your gross income minus any adjustments. Now let's talk about your gross income for a second. Gross income is all income for the year. That includes all your income, wages, tips, earnings from investments, and actually unemployment compensation counts also for income. So you take your gross. This is all the money that you brought into your home. And then what you do is you subtract these things called adjustments. Adjustments. Adjustments could be like we see here, payments from a tax deferred savings plan. Could be a lot of things. I will give you the numbers for the different cases that we have as problems for this particular section, so we won't worry so much about where the adjustments come from. Step number 1, AGI. Step number 2, determine your taxable income. Your taxable income. So what we're doing is we're starting with some money, and we're trying to make that money smaller and smaller by determining the amount of money that is going to be looked up in a table, if you would, to find your tax. That's called your taxable income. The way to find your taxable income is you take your AGI, your adjusted gross income, and you subtract from it these 2 items, item number 1 and item number 2. Now, what is item number 1? They are your exemptions, and it's normally a fixed amount for you and your dependent. So in this case, in 2008, it was $3,500. Okay, that amount can change from year to year, and it is located in your tax booklet. And then you also can reduce your AGI by your deductions. Now, what is a deduction? There's a standard deduction for each person. Sometimes that changes year from year. There's itemized deductions, which I used to do when I paid a lot of taxes on my house, but it's becoming harder to do that. Home mortgages are a big part of itemized deductions. You can actually take a deduction on your state income taxes, property taxes, charitable contributions, and so forth, and medical expenses exceeding 7.5% of your AGI. Now, I'm not here to throw cold water on things, but that number, 7.5% of your AGI, is a pretty big number. And that is going to be definitely affected by Obamacare and how that plays out. Okay, so there you are. Step number 1, AGI. Step number 2, your taxable income. I call it TI. And step number 3, determine your income tax. Now, the way you determine your income tax is you find your computation and you subtract from that any tax credits. So it could be $1,000 per child. Okay. Now, to find your tax computation, some people look up in a table, but we're going to do it step by step, and I want to show you where these numbers come from, and we'll go through it, and we'll use our calculator, and we'll find the real deal. So here you go. That's how you find out your tax. Step 1, step 2, and step 3. All right. Another big thing about hold on a second. Let me get the little table to show up better. Okay, I'm back here. Let me move this out of the way. All right. So percent and income tax. That's what this lesson is about. Let's figure your tax. You need to understand this table. There's your tax rates, or your tax bracket, if you would. That's 10%, that's 15%, 25%, 28%. This is your standard deduction. Now, this number is pretty common here, so 5450, standard deduction. And in this particular case, you're allowed to have $3,500 for each person as far as your exemptions are concerned. All right. Now notice this column of numbers is related to unmarried, divorced, or legally separated. We call that single. And then we have married filing separately and married filing jointly and so forth. So those are the different, we'll call them life categories. Okay? All right, what we're going to do in the next couple minutes is answer this question. We have right here a single woman with no dependents. Her gross income is $6,200. Her adjustments are $4,000 paid to a tax-deferred IRA. Okay, so she's trying to save for her retirement. And her deductions are $7,500 mortgage interest, $2,200 property taxes, $2,400 charitable income, and $1,500 medical expenses not covered by insurance. And she has a tax credit of $500. Okay, so that's one thing we want to know about this particular case. The question is, can we find her tax? Good question. Okay, so this is the information, and I put over here her AGI was 62,000. Well, we're trying to figure out the AGI. So her gross was 62,000, and we're subtracting 4,000, which is what, 58,000. Okay. Now she had some deductions here. So there was the mortgage, property tax, and charity, but there was medical here. Now remember, the medical counts if it's over 7.5% of her AGI. And hold on here. Okay, so if you take 7.5% of the AGI, you get this number right here. Now look at her medical expenses. Are her medical expenses more than 7.5%? No, her medical expenses are $1,500. So got some bad news. We're not going to be able to deduct her medical expenses. Now let's take all of these numbers over here and add them up. Well, folks, that's 9,000, so that's 11,000, 12,100. 12,100. Okay. Now, we have to take this number and take that away from this number. So let's go back and take a look at that for a second. We're going to take her deductions and her exemptions. Now let's look over here and see what her exemption was. Her exemption as a single person was $3,500. So let's do that. So we got 12,100, 3,500, and this is 00651, 15,600. We're going to take 58,000 and subtract that. Okay, when I do that, I take this number and this number, and I subtract them from 58,000. I should get this number. Now what we have to do is we have to figure out what the tax would be on this number. This is her taxable income. Now we look at her tax rate. Remember, she was single, and these are her different brackets. What tax bracket is this woman in? Well, she made more than 8,000, so she's past the 10% bracket. Did she make more than 32,000? She did. So she's in a 25% tax bracket. So let me explain how to figure out her tax. Okay, so the question is, how much money is she paying at 10%? She's going to pay this much, which is 8,025. So this is how much money she's going to pay in the 10% part. How much is she going to pay in the 15%? We're going to have to subtract these two numbers, and she would pay 15% of that money. And then how much would she pay at 25%? She'll pay 42,400 minus that number. So let's figure those numbers out. Okay, so 10% of this number is 802. 15% of this number is 3678. 25% of this number is 2462. We add these three numbers up, this one, and this one, to get this number. That is her taxable income. That is her tax that she has to pay. But wait a minute, didn't the person get a $500 tax credit? So what we're going to have to do is subtract $500 from here, and we get 6,443.75. That is the tax that this woman needs to pay. That is how taxes work. Now this particular example comes from an earlier edition of the book, so your numbers are going to be slightly different, but you follow the same procedure. Try it and see if you can you could work through the problems in the textbook that are assigned on your syllabus. Let's pause for a second and look at that. Okay, so this is your assignment here, section 8.1, 1, 3, 6, 5, 15, 19, 25, and then 38 through 43. These are short answers, okay? So these are the real main problems here for you to do. Try to do those problems. Do your best. See how far you can get on it, and we will begin Wednesday talking about these problems. Best wishes here, guys.